Hello, welcome back. It's Adam again. Thanks so much for joining me in today's episode about fees. Now, one of the big advantages of investing in a real estate crowdfunded deal is that you don't actually have to do any of the work, right? You don't have to have the experience, the knowledge, the background, the time, or anything. You can invest directly in a deal and have somebody else do all the work. But naturally, they're going to charge you some fees for doing that, right? Inevitably, their time is of value. And in any real estate deal, there are certain things that a sponsor is going to be charging you fees for. So first of all, let's take a look at the Small Change website. We'll go to completed projects and we'll scan down to platform at Melon. And the way I'm going to show you how to find the fees in this project is we're going to go to click here to download the disclosure packet. And when we go to the disclosure packet, the way to find fees, and this is a great way to move quickly through a long contract. Look at this thing, it's 63 pages long, is just put in the search bar this word fees and then go ahead and search, hit enter, of course, go ahead and search. And there was one spot that I wanted to show you in particular. Here it is. So in this section, we have compensation of manager and its affiliates. And there are three fees laid out here. One is acquisition fee, another is asset management fee, and the third is fees for other services. Now, in this particular case, you can see that the manager has not taken an acquisition fee and does not take an asset management fee, but they do take or have the potential for taking fees for other services, provided, and there are three provisos here. One is that it's fair to the company. Two is that it's promptly disclosed. And three, the most important, is that it's comparable with the kind of fees that the project would expect to have to pay if it went to a third party, an unrelated party, right? And the key to understanding the importance of fees, that they are necessary, is that they don't become an incentive for the sponsor, because they are going to be paid before you get any money out of the project. So you're going to invest in a project, and before you get your capital back, and before you even get any preferred return, the sponsor is going to be taking fees. Those might be acquisition fees, they might be management fees, they might be assets under management fees. There could be there's a whole raft of fees, which is why it's important for you to go into the offering documents and figure out exactly what fees that there are, and being cognizant that they are not serving as motivation in and of themselves to the sponsor. In other words, that the sponsor is not being driven to do this deal simply because of the money they're going to make from the fees, all right? As long as they are fair and reasonable, that's going to be fine. That's a very high-level summary, as all of these short videos are, on the concept of fees. So be sure to go to leadersofthecrowd.com/small change, where you'll get access to a detailed course that explains the 8 key financial terms in real estate investing. Thanks so much for joining me. I will see you in the next video.